Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Robert Campbell, editor of the realestatetiming.com digest. Welcome back to the show, Robert.
Hi, Jim. Happy to be with you again.
Well, you're taking a look at us from Southern California. How does Canadian real estate look, and what kind of a mess are we going to get ourselves into?
I think the Canadian real estate market is now in a very dangerous position. Of course, it's been in a dangerous position the last 2, 3, 4, even 5 years. But those prices are starting to reach such lofty levels that they make Americans' high-priced real estate look cheap in comparison. So I just hope that our Canadian listeners out there are aware, because I've seen the charts and I've seen the parabolic moves and how far they've moved up, that anybody that studies history know moves like that are unsustainable, and prices are going to come crashing down at some point in time. I can't say when yet because I'm not tracking the indicators for that market, but you guys better be real nimble to get out of that market, because you're going to get anybody that bought anywhere close to peak values. But Canadian real estate, anywhere in the last 5 years is going to be sitting with losses during the next 5 and 10 years after it rolls over and starts heading down.
When it starts to go down, do markets of any kind, when they do start to correct and go down, do they go down much faster than they climbed?
That's hard to say, because that even the only with respect to bubbles, and you guys are clearly in a bubble, and the United States was in a bubble from 2002 through 2006. When prices rolled over and started heading down, you had time to get out, Jim. There was a couple of months where prices dropped, 2%, then 3%, and all of a sudden there was the bargain hunters came in and prices were up 2%, and then the decline started. So you had time to get out. What I'm seeing right now, the last news reports I've read about the Toronto real estate market, in the last 3 months, housing prices have dropped 15%. That's not allowing you much leeway to get out of that thing. So that's why I would caution our, Canadian listeners that be real careful, you guys. I mean, if you guys are gonna, hang in there to get the last, top tick before you get out, I think you're playing a real risky game.
Now, in Toronto, they just recorded something like an almost 7% price drop just month to month. And yet a survey found that a third of Toronto homeowners plan to list their properties this year. What do those two things tell us?
Well, that's just going to accelerate if in fact it has rolled over to the downside. And I can't tell, because some of the reports that I'm reading, Jim, about the Canadian market, your publications up there, they like to quote month-over-month price moves instead of year-over-year, which is what I follow, which is far more significant. Because month-over-month statistics, and even every 2-month statistics, that can be pure noise. I'd rather listen to the signal. The signals occur on a year-over-year basis. However, if this thing, let's just for the sake of this discussion, say that things have rolled over, and all of a sudden now the supply's really going to hit the market. What that's going to do, if this downturn in prices is as fast as it's been so far, things could really start going downhill fast for Canadian housing prices.
Once something like that happens, how much value could be lost?
Oh my God! From where you guys stand, I've seen the chart. I'm guessing. Now, I mean, this isn't just a wild guess. This is based on mathematics, because I know that all markets, whether it's real estate, stocks, bonds, gold, or commodities, whatever, always return back to normal before a new uptrend could start. I wouldn't be surprised at all to see Canadian housing values fall in excess of 50%.
What kind
and
of
that's on a real basis, and adjusted for inflation. So I don't know what your inflation rate is up there. So let's say it takes 5 years to drop 50% on a nominal basis, which means unadjusted for inflation. Add 2% year, add 10% of that. So that would be a nominal drop of about 60%. That wouldn't surprise me in the slightest. Heck, here in California during the real estate bust, we had, when the bust started in 2005, about 6 to 9 months ahead of time, I was predicting that California housing prices would drop 50%, 40 to 45% from peak values, and everybody looked at me like I was crazy. Everybody looked at me like I was crazy, Jim, and I'm not exaggerating one bit. Well, housing prices didn't drop in California 40 to 45%. They dropped 52%. And so, I look back at that, and they thought it was me who was nuts. So those kind of price moves are not, not that uncommon, especially when markets get as overpriced as they did. California housing prices during the bubble, they tripled in value, Jim, tripled. Then when the downturn came, they fell 52%. So you guys are definitely in that category. You're right up there. That's the league. And if you don't believe me, study history. Go back and look at history. Study history, study history, study history. That gives you a perspective on what extended moves like this, what their potential is to the downside once the trend changes.
Well, with a trend like that, if you're a smart trader, this is just me off the top of the head, sell your house now, wait 3 years, and then buy 3.
I would think, anybody that sold the Canadian real estate market right now, I would say, look, even though you may not hit the exact top prices, you're close, because you guys just raised the Canadian Central Bank just raised its discount rate last week or so too, right?
Yes.
The tightening is starting, guys. They may cave in, but everything we're seeing we don't know that these central banks are going to cave in, whether it's the Canadian Central Bank, the U.S. Federal Reserve. They're tightening right now, and they're doing it for a reason. They're trying to get interest rates back up to some reasonable level so that when the next downturn, comes, they can cut and say that they're doing something to fight the economic contraction. So I wouldn't be afraid. Look, after the move you guys had right now, don't let greed, get too deeply in your head. Take your profits. The signs are there.
We'll have more with Robert Campbell right after the break.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineered gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Welcome back. We're speaking with Robert Campbell. Bob, is the U.S. real estate market topping?
No, not yet. We're still going up. I'm more cautious now than I have been in a couple of years because of, as I mentioned, the Federal Reserve Board is raising interest rates. They're threatening to the Fed's threatening to unwind its $4.5 trillion balance sheet. None of those can be good for the market. However, prices are still going up, and there are no immediate signs that the market is in a significant way slowing down. So I'm telling my subscribers, stay long. Don't be in a rush to sell yet, but it's coming.
Is real estate in the U.S. likely to avoid a crash like 2008?
Maybe not. This has been quite an extended move, Jim. I think in my last timing letter that I sent out, I predicted that U.S. housing prices, when the next downturn comes, and again, this isn't a wild guess. This is based on mathematics that I share in my timing letter. I said housing prices are going to drop, I think, between 30 and 35% nationally, and because California has the most volatile real estate prices in the country, and that's where 80% of my subscribers come from. That's our national product, by the way, real estate. That I said you can add 5 or 10% to that. But I'd say nationally, housing, U.S. prices are going to drop 30 to 35%, add 5 or 10% to California. This has been an extended move. This is an extended move. Just like the stock market. This is a fully priced stock market. It's a fully priced real estate market here in the country, in the United States. But we're not there yet. But don't get too far away from the exit doors, because I think there's an old expression that the first horses that run out of a burning barn get scorched the least.
Do the people at the central banks understand the value of real estate and how extensively both the Canadian and U.S. economies are wrapped around the real estate industry? Because so often the stats I hear they look at, it's like they compare widget sales and how much oil is sold, but they're not really super tuned in to how much of the economy is soaked up by your house.
I believe they do know that, Jim. You can't be sure, but I believe they do know that because as a store of wealth, let's say the average American, about 75% of his net worth is in real estate, most of it which is the home he lives in. And that's the reason that they dropped interest rates so much here in the United States, the Fed, was to spur real estate, to give them a feeling that, they're wealthy again. They'll take some of that new equity or more of their income or more of their savings and spend it, because of the wealth effect. But I think they do know that. I think they know that elevating asset markets, be it the stock market or the real estate market, is really important to the overall confidence of a country. And I think they know that, and that's why that they're reluctant to do anything crazy like bring interest rates back to normal, because they know what that would do to the markets. So, do they have a plan B after that? No, they don't. But you got to play the boom/bubbles for what they are. You can make a lot of money in booms and in booms and bubbles, as long as you have an exit strategy on when to get out. And that's the name of the game. That's the new reality in today's economics. Boom and bust. Because it's so much controlled by the monetary controls of the central bankers, and they'll do anything to lift asset prices, and they do, but it's not sustainable, and it's strictly manipulated. But I think they are aware. Maybe I give them too much credit. What do you think? Think I'm giving them too much credit?
I don't know. I've covered governments for 42 years. I don't know how much credit I'd want to give any of them.
These guys aren't low. These central bankers aren't low IQ. I know most of them don't have any real world experience, but I think that they're under pressure to keep the economy out of recession, keep jobs up, regardless. Do they, when they say that, we're not in a bubble yet, like the central bankers, the Fed chairmen here in the United States, anytime those guys tell you it's not a bubble, it's time to sell, because it is.
We'll have more with Robert Campbell right after this.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the 4th largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com.
Welcome back. We're chatting with Robert Campbell. Bob, are interest rates and mortgage rates likely to go higher in the U.S.?
Maybe in the short run, but I don't think so in the long run, Jim. I don't think so. As long as the federal, the only way that they're going to go higher in the U.S. is if we get an outbreak of inflation, and the people that hold, long treasuries or long bonds are not going to, sit tight with a 2.5% return over that period of time. And that of course is out of the control of the central bankers. It could happen at any time. A lot of people have been saying that, inflation's going to rear up for years now because of all the credit and all the printed money that the central bankers have created, but it just hasn't happened yet. And the reason it hasn't happened, it's because that there's a lot more slack in the economy than the powers to be want us to know about. And it's like flying a jet, Jim. All of a sudden, you're flying along straight and level, and all of a sudden, you lift the nose up, higher and higher to get higher, and you put more and more power to it. Eventually, that you can't apply any more power to that plane because that plane, just because there's not enough power behind it, the engine is the nose is going to go down and stall out, and you're going to be in a fall. That's exactly what's the case with the economy. These these central bankers have applied power, but at some point, you're just not going to keep the plane up in the air, and the nose is going to go down, and you're going to be in a downward spiral. And that's what's going to happen.
Yeah, and
I almost guarantee you that's what's going to happen.
Is there now a weak dollar policy in the U.S.?
Well, it's weaker than it was. It was over 100 maybe 6 to 12 months ago. Now it's around 95 or so, 96, which is really interesting because the Federal Reserve is raising interest rates, short-term interest rates, and the dollar's going down. Like, it should be just the opposite. With interest rates going up, the dollar should be increasing because the dollar is more valuable because we have a higher rate of interest, which all goes to show you, my friend, that a lot of things in this world don't happen the way you think they're going to happen. That's why the only thing you can do to stay ahead of the curve is follow key indicators that are correlated with price movement and use those not only to keep you into rising markets but take you out of falling markets.
Are you bullish or bearish on gold and silver?
Long-term bullish, very bullish. I think in the next 5 to 10 years, way more so on gold than silver because I don't understand silver, but I do understand gold, that it's been an accepted form of money for, thousands and thousands of years, and I don't think that situation's changed. And I think at some point in the future, here's what's going to happen. They're going to, just like they did in the 1930s. What the central bankers are doing right now, Jim, is they're fighting deflation. And what they're going to have to do to protect all this debt that's owned by the banks and by the big system, they can't allow deflation to occur, just like what happened in the 1930s in the United States. And what they did, President Roosevelt revalued gold from $20 an ounce to $35. And in 29, 30, 31, and 32, there was deflation in the United States. As soon as he revalued gold, that saved the economy, that saved the debt, and now we started having positive inflation again. Well, this time with all this debt out there in the world, and it's just, an unbelievable mountain of it worldwide, they're not going to, raise the price of gold by 70%. They're going to end up raising the price of gold by probably 1,000% to protect the debt. And that's what's most likely to happen. It's one thing, I'm a market timer. I'm a trend follower. I'm a market timer. I believe in the secret of success is avoiding bad markets. The only thing I do not market time is gold and silver because I think when that day comes, this turn in prices could happen so fast when they could revalue the metal to save the debt, to save the economy, that you're not going to be able to buy it at any price. It's going to go from $1,200 an ounce to $12,000 to $25,000, depending on how much debt there is out there to protect. It's going to happen that quickly. So that's the keel of my boat, gold. I don't market time it. I hold it long term, and I'm always real comfortable knowing, how safe it is.
So you believe in cost averaging, just by, a certain amount every
more
month?
or less.
Yeah.
Whenever I have extra money, like let's say I have an extra, I don't have all my savings in gold by any means, but I certainly have, like way more than the average American. Something like 1 out of every, like 99 out of 100 Americans don't even own 1 ounce of gold. That's nuts.
Well, I saw a little comedy skit where people were offered a big chocolate bar or an ounce of silver, and they all took the big chocolate bar because they
saw
thought...
that. Does that show you the ignorance, the financial ignorance of most people?
Yeah, at the time that silver was worth about $23.
Right. Oh yeah. People have no idea what. If you were going on the street and poll, let's say 1,000 people objectively, I bet you there wouldn't be 5% of them that knew what the price of gold was right now. I mean, that's just a guess, but I know that. I mean, people just aren't tuned into that. And the U.S. authorities are certainly manipulating the price of gold because that goes against everything that they want to promote. But I think at some point in time, it's money you don't need. It's mad money. It's it's like a safe room in a house. That's where you go when all hell breaks loose, because I think that's what they're going to do. They're going to revalue it for the simple reason of saving the debt. And I know a lot of people haven't heard that term, but I hope you remember that. Save the debt. Because what you're going to do is you're going to back the currency, specifically the U.S. dollar, instead of having zero backing in gold, you're going to give it like 20-30% in gold. And so anything that's denominated in debt, in gold, especially the U.S. debt that's denominated in dollars, all of a sudden now people are going to go, hey, mate, I don't have to get rid of this. There's not a 30% or 40%, 50% chance of default. So in other words, I'm pretty well safe. I can turn this stuff in and convert it into gold at any time. And they probably won't even fix it. They'll let the price of gold float. So as long as these governments want to keep creating credit and money out of thin air, up goes the price of gold to back it.
Is the left-right divide...
I've done a lot of research on this, Jim. A lot of research. So I just want the people listening in, just to know that this isn't a wild idea I just came up with in the last 30 minutes to make this discussion between you and I more interesting.
Is the left-right divide in the U.S. growing, and could it affect the economy?
Oh, absolutely. Jim, it's never been this bad. It's war. It's hatred. And I saw something the other day in Venezuela where Venezuela is bringing out the military to protect the status quo, the corrupt socialistic politicians. And I would say that there's at least a 50% chance that's what's going to happen in a lot of other developed countries, including the United States. This is socialism versus capitalism, Jim. This is the new war. The capitalists, what do they want? They want small government and let the free market economy decide what the price of anything is. And if you want to get ahead in life, you're willing to work for it, and the opportunity's there. I know that's old school. The new socialist is this. Government gets real big. You let them control your lives. If people don't want to work, there's an adequate safety cushion there. And where do you get the money? You either print it or you tax the evil rich. And I've never seen it this bad. It's going to end up in bloodshed.
Well, hasn't the biggest problem been that the middle class is disappearing, and you have the upper elites, just a handful of people holding all the assets?
That's right. But you know what? The reason that hasn't happened by chance. The people that have all the assets are the bigwigs in the United States. The people that the politicians, the big corporate heads that pay that are in the back pockets of all these politicians, the bankers, to make things right for them. So there's corruption there too. All you have to do is go back and say, how did Donald Trump get voted in as president? Was it because everybody in the United States is feeling real good about, the state of the economy and their own personal future? No, just the opposite. And that's all you have to say. That's the reason. And then the people have voted. They voted and they said, we don't feel good about things. And that's the honest state of affairs in the United States. And what you have to be so careful about when you hear these statistics coming out of the United States. I don't know what the concentration of wealth is in Canada as compared to the United States. Is it similar, Jim?
Not really.
It's more balanced, right?
Yeah, it is.
Okay, here in the United States, let's say they say income growth this year is up 2.3%. It's improving, but it's still not good. That income growth, you know what that includes? The top 20%. I mean, the top 10%, let's say. Do you know what percent of the income is in that top 10%? Probably something like 70% of it. So if you took them out of the equation, there wouldn't be any income growth of 2.3%. It'd probably be like minus 2.3%. So
now
they include the big fat guys. It's the same old story. Like you're talking to 1,000 people in a room. In that room, sits Warren Buffett. They go, the average household income, we've taken a poll here, the average household income is $65,000 per year. Warren Buffett walks out. You know what the household income drops to? $45,000. And so that's what you got to be careful about. And nobody even questions that. It's the rich, the real big fat guys, that are in the pockets of the politicians. They have a huge disproportion of wealth and income that's included in the averages. But one thing, they only got one vote, didn't they? Versus everybody else gets a vote, poor and rich alike, and that's why Trump got elected president. That's the long and the short of it.
But you have to take a look who finances the election campaigns on both sides of the border.
Right. Yeah, it's not poor people, is it?
No.
No. So I don't like politics, Jim. I don't like it. I'm apolitical. I hate them both. Hate both sides. They're two mob families. It's the Genoveses and the Gambinos. Which do you prefer?
Do you want the lead or the silver?
Right.
Are private and public pensions safe in the U.S.?
Nope. Neither. I mean, they're both, I think public pensions are underfunded about 35% nationally. Some states are doing better than others. The state of Illinois, for example, is the poster child for the worst case. I think they're underfunded by 75%. And other states, like I think Oregon, Washington, maybe North Dakota comes to mind. They're in far better shape. They're only underfunded by about 5%, but they're all in trouble. And on a national basis, they're underfunded by 30%. And that's private. Public, it's pretty much the same. It's pretty much the same. And if you want to see what's going to develop in the United States, just watch the state of Illinois and the city of Chicago. Their public pensions are underfunded something like, 70%. They just raised property taxes 30% about 6 to 12 months ago, and that didn't even cut a dent in it. That's not enough. So they're raising state income taxes by 38% and corporate income taxes by a similar amount. And Jim, you know what that's going to do? You know what the rich are going to do? They're going to leave the state. They're going to leave. Just what happened in Detroit. People vote with their feet. They'll leave. Corporations will leave. I mean, and it's all to protect the quote unquote public servants who get these incredibly inflated pensions because they load the box in the last 2 or 3 years of their employment. You know how they do that, right?
Yeah.
Exactly. The whole system's rotten to the core. And we're all going to get what we deserve. We're all going to get what we deserve in the end. That's always the case. Even mighty Rome fell. Rome got so bad, the soldiers were out there looting their own people for money because the state couldn't pay its pensions.
So far, has the Trump administration been able to improve things in the U.S.?
I'm not sure. I believe his intentions are good. because I'm a conservative. He's a conservative. He's a businessman. He's proven himself. He's not corrupt. I mean, at least he got a conservative on the Supreme Court. Some of these, I don't like his trade agreements. I think they're very destructive. However, he's trying to he's trying to eliminate regulations that is preventing the formation of small businesses that contributes to 70% of U.S. employment growth. There's anybody that wants to go in business for themselves nowadays, they should have their head examined first. It's not worth it. You have 30-year-old MBAs out of Washington that are telling you how to run a business when they haven't had one day of real-world experience themselves. But they just have to impose regulations and taxes and hurdle after hurdle. And, in a weak economy like we have, it's not working. New business formation is almost at a standstill. Almost at a standstill. For every new company that starts, there's one that's going out of business. And that's not how we're going to get ahead in life. So at least Trump wants to do that. At least he talks about it. Of course, I don't know what to believe anymore. My main sources are the media, like everybody else's. Do you believe the media?
I am the media.
Yeah, but you're a good guy. We talk about things where there's data behind it and things like that. We're not out there, manufacturing stories and conspiracies and being overly optimistic about things. We try to be realistic about that. If you weren't like that, I wouldn't agree to these interviews with you, Jim.
Well, Robert, I've been fired because I have refused to manipulate stories into what the management wanted. I based my story on the facts I found.
Exactly. Look at the evidence and then draw conclusions. I mean, is that the way most stories are formed nowadays? No. They draw conclusions and then show no evidence that supports that conclusion.
Well, they cherry pick.
And they figure that if they repeat that conclusion enough times, everybody will believe it.
Well, no, they cherry pick facts.
And you can cherry pick it.
Sure.
Exactly.
Like interview 100 people.
One of the things that's wrong with my country is at the college level, they don't teach critical thinking anymore, which is what we're talking about, Jim.
Professors are fired if they encourage critical thinking.
Why? Why is that, Jim?
Because
are
it doesn't.
Are they protecting their own buttered bread? Is that it? If they think that they were honest about things, do you think that if all of a sudden they got college costs down to what it should be, as opposed to these highly inflated numbers, do you think their salaries would be what they are? I read a couple of years ago, 2-3 years ago, the average salary of a Harvard professor was close to $200,000 a year. And I know the kind of crap those guys teach. Do you think I could handpick some people and get them to teach those kids teach them even better for $60,000 a year? You think I could find guys like that?
Universities are dependent on research money. The research money comes from big corporations like Big Pharma. And if your research results don't match up with what Big Pharma wants, you're not going to get that research money anymore. That's
right. See, I had overlooked that too.
Yeah. So they're totally dependent on that.
Right. And so, again, is there the potential for corruption? Is that there? You're damn right it is.
Well, I'll keep changing.
Their own best interest.
Sure, I'll keep changing.
If it was a free market economy, that's fine. Free market, that's the way the world works. And even though, free market capitalism can be brutal, it delivers a higher standard of living than any other form of government. So you got to decide what you want. But what we're seeing right now, worldwide, is the death of capital, the death of socialism, Jim. It's dying. The pensions are going broke, privately and publicly. The Medicare system, which is a complete joke. The U.S. medical costs are 2 times greater than the global averages. And why are they so much happening? Because they're corrupt. Because, they're in the back pockets, the pharmaceutical and the health guys, insurance companies, are in the back pockets of the politicians.
Well, also don't forget the U.S. healthcare system is based on profit, not on outcome.
Right. You know how I could fix the U.S. healthcare system in 1 minute, 60 seconds. You know what I would do? Nobody can charge more for healthcare, for any procedure or any appointment, medical appointment than is allowed by Medicare. Wow. Jim, I had to have a surgical procedure done about 5 years ago. I'm under Medicare. I just turned 70 years old, so I've been on Medicare for 5 years. I was under Medicare at the time. The insurance company made a mistake and sent me a bill for a little over $13,000. And I'm not exaggerating this, $1. A little over $13,000. They finally relented, and do you know how much of that $13,000 bill that Medicare agreed to pay for and that they happily and willfully accepted? $3,000. So that means healthcare costs in the United States are 75% inflated over what they should be. Because, I mean, if Medicare paid those outrageous prices, they would have been long gone, 10 years ago. They won't pay it because they know it's not worth it, and the American public can't afford it. But if they can get it out of the private sector, they'll do it. Oh, I know. This is the straw that's going to break the camel's back. I don't know if we've talked about this before, but I've been saying this for 4 years. It's medical costs. Americans were polled recently in an objective poll, and they said, what's your number one financial concern? Number one was healthcare costs, Jim. It wasn't college costs. It wasn't lack of employment opportunity. It wasn't low incomes. It was medical costs. That's what's going to nail us. That's what's going to nail us.
Well, maybe the U.S. will get to the maturity level Canada had back in the 1960s.
Don't count on it. Crash and burn, my friend.
Yeah, well, exactly.
Just brace yourself. And, I tell everybody, don't try to save the system. Save yourself. I mean, we're all good law-abiding citizens, but, that how many times going back to history, read through history and see how many times, governments have figured out that they really screwed up and reformed themselves on a voluntary basis. How many times do you think they've done that in the past, 2,000 years of history? Zero.
Well, yeah, there we go. Bob, we
so
could
it's
go on.
not going to happen.
Yeah,
they're going to protect their jobs, their pension, because the American public might not be doing well, but those 535 senators and representatives, they have nothing to complain about financially, Jim. They're doing real well.
Well, I've always said if minimum wage is so great, why don't politicians pay themselves that?
Yeah. I'll tell you something else. If they think their medical care system is so good that they're trying to ram down our throats, how come they don't have to? How come that's not the medical system that they have to use?
Yeah, politicians
they have
should
some
live by the same
Cadillac
rules.
System that'll just make you drool. But is that the one that they're proposing for the American people? Hell no. Not even close.
Yeah, I know, a box of Band-Aids and a bottle of Pepto-Bismol and a note that says good luck.
You'll be okay.
Yeah.
Hang in there. I know.
Bob?
So, I mean, it's, and I hope all our listeners out there don't think I'm being, overly critical, because I'm not. I'm not that kind of person. I'm real objective. My whole life is based on objectivity and what I do, and my business has been based on that for 15 years. And if it was just subjective crap, I wouldn't have a good business today, which I do. So this is as I see it, and especially as I get older, you can see what's happening, more clearly than you could that when you were younger and you were kind of naive.
Bob, thank you so much for chatting with us.
It's been my pleasure, Jim. Anytime. Look forward to doing this again soon.
My guest has been real estate expert Robert Campbell. Check out realestatetiming.com. You're listening to HoweStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. The quality there is excellent, by the way, folks. Any questions for us or our guests can be sent to info@HoweStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.